Dear colleagues, good morning and a cordial welcome to the annual accounts press conference of BMW AG. I'm delighted to have the opportunity to welcome you all here at the BMW World, also on behalf of the Board of Management. Today, colleagues from 18 countries have followed our invitation, and I would especially also like to welcome all the spectators following our conference live on the internet, where it will be also available on demand later on. The press conference will be simultaneously interpreted for you, and you can see the channels up here. So, dear colleagues, today we'll be reporting on the past financial years, and of course we will also give you an outlook onto the year 2019 and beyond. The financial report, our yearbook, and the sustainability fact book are available for you. When it comes to the financial statements, we have taken a new path. The online version is accompanied by an audio vision version, and you can also look into our social media channels where you can find all the facts and figures of the previous fiscal year. The sustainability report 2018 can also be found for download online. So, dear colleagues, here on stage, as usual, you have all the members of the BMW Group. On my left, I would like to start with Harald Krüger, the chairman of the Board of Management. Next to him, Klaus Fröhlich, responsible for development. Then we have Peter Nota, he's head of the division Sales and Brand BMW. And one board member who's here for the first time at an annual accounts press conference. Welcome to Dr. Andreas Wendt. He is head of the division Purchasing and Supplier Network. He's on my very left. To my right, we have Dr. Nicholas Peter, our CFO. Next to him is Kaina André. She's responsible for human resources and our labor director. Next to her, Oliver Zipse, charged with production. And to the very right, Peter Schwarzenbauer, responsible for Mini, Rolls-Royce, BMW Motorrad, customer engagement and digital business. So what can you expect this morning? Well, first of all, Mr. Krüger will explain to you what the BMW Group sets apart from the competitors and how we'll take 3 stages into the future. And then Mr. Peter will follow with the detailed figures on the business development of 2018 and our outlook. Following that, Mr. Krüger will then present to you our model offensive, which we call Model Offensive 2.0. And there is also one new vehicle included in this, and afterwards you can then ask your questions to all members of the board. And then finally, and I think that's also important for all of us because we will have earned it by then, we will then invite you to join us for lunch. So much from my side, and now, Mr. Krüger, the floor is yours. Thank you very much. Good morning and welcome. Today I would like to show you what sets the BMW Group apart from our competitors, with a look back into the recent past and then with a look forward into the future. We are shaping successfully the future of mobility, and in doing so, we are consistently charting our own course. We're constantly redeveloping our business model because it has to be profitable and successful also in the digital age. And one example for this is our new joint venture with Daimler, which combines all our Now services. We're strengthening our core business and our global presence, for example, in China and the US. We deliver because we turn words into actions. Our successful transition to the new emission standard, WLTP, is a good example of this. So, ladies and gentlemen, in recent past, we've evolved from a pure manufacturer to a mobility provider, and going forward, we aim to be a leading tech company for premium mobility. For this reason, we are providing our company a new and stronger foundation with regards to technology, in our relationships with customers, and in our processes, structures, and our work environment. That is no easy task by far, but we are a very strong team. We continue to consistently follow our strategy number 1 next. We've been implementing measures for the past 3 years, and our focus extends up to 2025. We have a clear vision of the future. Our journey has 3 stages, with milestones in 2018, 2021, and 2025. The first stage, the one up to 2018, has already successfully been completed. And what was the BMW way? What sets us apart from others? Well, one thing I want to make very clear: BMW Group vehicles have not been manipulated, and that has now been confirmed again. We have invested heavily in new products, in new drive technologies, and in digitalization. We have electrified many models and model series. Our BMW i3 continues its success year after year. Worldwide, the total was more than 140,000 electrified vehicles in 2018. We started the biggest model offensive in our history that helps us to win market share across the globe. Since 2016, we have made major advances in the development of autonomous driving, and our autonomous driving campus outside Munich is now working at full speed. At the same time, we've strengthened our footprint in all major regions of the world, and we've expanded our capacities. All of this shows you can trust us. The BMW Group is robust, fast, and flexible. We're now entering into the second phase of Number One Next, which will take us up to the end of 2021. What are the challenges for our industry now? Well, the business environment remains highly volatile. E-mobility will continue to grow in importance, and the development of highly automated vehicles will continue to make advances. Now, what do we do differently than others, and why? Well, we're systematically investing in our range of electrified vehicles for all customer needs. We also will create additional flexible platforms for the different types of drivetrains, for combustion engines, for plug-in hybrids, and for electric drivetrains. From 2020, the popular BMW X3 will be our first model that we will offer with all three drivetrains. Customers will then have the full choice. This broad approach allows us to remain flexible, and it's the most efficient solution at the same time. A single platform for all. We will keep our foot on the throttle with new model releases. This year alone, we will launch more than 20 new or updated models, and we're electrifying all our brands and model series. By the end of this year, we will have 500,000 plug-in hybrid and electric vehicles on the road. E-mobility is fun, amazing acceleration, and virtually silent, thanks to the electric engine and the battery. Together, they form the heart of every electric vehicle. We produce the electric drive and high-voltage systems ourselves, which makes sure that we have the essential expertise firmly in our own hands. Regarding battery cells, we will continue to build on our existing expertise, and for this summer we will open the new BMW Group Battery Cell Competence Center in Munich. Through Charge Now, our customers already today have access to more than 100,000 charging points in 25 countries. And Charge Now also shows that cooperations between companies are gaining in importance. We always seek out the most suitable partners in different fields, and in two important areas of future activity, we've embarked on a long-term cooperation with Daimler AG. To provide more services in more cities, we've created 5 joint ventures. Already now, the Now services have more than 60 million customers, and together we will invest over 1 billion euros. The benefit for customers is that everything comes from a single source, and soon from a single app. When it comes to autonomous driving, both companies already have extensive know-how, and together we'll be developing next-level technology for autonomous driving for our models from 2024 on. As a global company, more than ever, we have to satisfy different demands in different regions, and with our strategy Number One Next, we want to grow in all major regions of the world and aim to expand our market share. And to achieve this, we have specific strategies for each region. Let me start with China. China is our largest single market and a strong driving force for e-mobility. Our approach is as follows. With our new plant in Shenyang, we'll increase our capacity to 650,000 vehicles per year. And with our new joint venture with Great Wall, we will build fully electric mini vehicles. From 2020 onwards, we will produce the first fully electric BMW, the iX3, which will be exported from China to the rest of the world. In the US, we continue to invest in the expansion of our Spartanburg plant. This year, our plant celebrates its 25th anniversary there. The new BMW X7 signals our firm commitment to the US, our second home. The US Department of Commerce has once again confirmed that BMW, for the fifth consecutive year, is the leading US automotive exporter by value. With our new plant in Mexico, we will expand our sphere of activity in the Americas. This plant will open in June. Europe is our largest sales region and home to most of the BMW Group plants and home to most of our employees. The political situation remains tense due to the uncertainty over Brexit, but we are well prepared for all scenarios. The same principle applies for all our regions. Our commitment is geared towards the long term. But free access to markets is essential for all of this because it ensures growth, prosperity, and employment everywhere. Ladies and gentlemen, to become an agile tech company, we also need to change ourselves internally. Efficient structures have always been part of the BMW Group, and let me give you two current examples: a cross-divisional program, Performance Next, and a new sales and marketing structure. We've started implementing Performance Next some time ago, and our goal is to become faster, profitable, and more efficient. We're concentrating specifically on three fields: customers and sales, vehicle, and organization and structures. Performance Next will permanently change the whole company. We're targeting a total savings potential of more than 12 billion euros by the end of 2022. These measures will be sustainable and have an impact well into the next decade. Let's now look at the second example. Our relationship with customers is vital to the success of our business. Starting in April, we will have one sales division for our BMW, Mini, and Rolls-Royce automotive brands. This will be known internally as the C division, and C stands for customer, which shows our clear focus on the customer. The division will be responsible for creating a consistent brand experience across all touchpoints. Our colleague Peter Schwarzenbauer will leave the company in October at his own request when he turns 60. That was his decision to leave on his 60th birthday. And at this juncture, I would like to thank Peter Schwarzenbauer cordially for everything he's done for the BMW Group, for the topics he's driven ahead, such as mobility services, the digitalization, and then to bring the brands Mini and Rolls-Royce to new heights. And I well respect his decision, and I'm looking forward to the coming months together with you. Now, a smaller board of management, from our point of view, sends the right signal for consistently streamlined structures across the whole company. And successful marketing supports our sales activities worldwide. Each of our premium brands embodies emotions. The same goes for sports, and this is why sports have always played a key role, or for a long time played a key role in our marketing. And here too, we will be taking a new direction with strategic partnerships in the future. The third stage in the implementation of strategy number 1 Next will take us all the way to 2025. And here the BMW approach is again quite different from that of other companies. BMW Next stands for individual mobility at a whole new level. It will enable the entire company and all our brands to face the challenges of the future. It's our innovation and technology flagship, and you can see the concept car here on stage. Other than its four wheels, it doesn't have much in common with a regular car. The iNext combines several future technologies, amongst them full connectivity, a futuristic interior, an electric range of over 600 kilometers for everyday drivability of both short and long distances. And it also signals the launch of Level 3 highly automated driving. At the same time, we'll be also testing Level 4 and 5 autonomous driving in urban areas with a fleet of iNext vehicles. This opens a whole new chapter for the BMW Group. Today, more than 80% of accidents are caused by driver error. Autonomous driving can virtually eliminate these accidents. Safety is our top priority in developing these cars. That is why we go to such lengths to safeguard these new technologies, and by the time we launch our Level 3 system in 2021, we will have clocked up more than 240 million test kilometers, and around 95% of these in simulations. Technologies from the iNext will be incorporated throughout our entire model lineup. The BMW iNext will be released onto the market in 2021. Autonomous driving relies on and generates huge quantities of data, which means that data analytics will become a game changer. Next week, we'll be opening a data center outside of Munich, and by mid-2025, we want to have 500 petabytes of storage capacity available, which is needed to process data off boards. Ladies and gentlemen, being mobile will continue to be part of our lives, also in our globally connected world. At the BMW Group, we will continue to drive sustainable, connected and autonomous mobility forward. So much for the moment, and later I'll show you the models that will inspire customers in coming years. Thank you very much. Thank you very much, Harald Krüger, and now Nicola Peter, the floor is yours.
Thank you, Max. Good morning, ladies and gentlemen, and a warm welcome also on my own behalf. The year 2018 once again demonstrated the financial performance strength of BMW. And despite massive headwinds, we reported the second best result in our company's history. For the past 15 years, BMW Group is the world-leading premium car manufacturer. Our EBIT margin of 7.2% is still at a high level also compared to competition and is in line with our adjusted guidance for the full year. Nevertheless, let's clearly state the facts. Our performance in 2018 did not meet our usually high standards. The challenging environment left its mark on the entire automotive industry last year. I'm referring in particular to the trade dispute between the US and China, but also the challenge of regulations and the negative trend in exchange rates and commodity prices are really affecting the outcome of all the manufacturers. Although we very smoothly mastered the transition to the new WLTP test cycle, the price war initiated by some of our competitors also impacted our profitability. At the same time, we are managing planned expenses for our ongoing business and are setting our company's course to the future. Ladies and gentlemen, BMW Group is undergoing the largest model offensive in its history. We are investing billions into new products in mobility, autonomous driving, and the next strategic steps of mobility services. There we see enormous potential. What is decisive is scalability. E-mobility is a challenging economic, but it's also without any alternative. As premium manufacturer, we've got the best prerequisites in order to master electrification successfully. In 2018, despite these extremely volatile conditions, it was an overall successful year for the BMW Group. We were the only premium car company to see growth in the US. In China, we delivered more than 640,000 vehicles in a contracting market. And in Europe, despite sales distortions due to WLTP and declining market, we were able to maintain sales at the same high level as in the previous year. We also deliberately cut production to avoid fueling price wars. BMW brand deliveries reached a new all-time high. In Europe, as planned, we were able to grow our segment share. Worldwide, in particular our X models, in particular the new X3, with almost 38%, were really high in demand. BMW 5 Series once again posted a significant increase in sales. Despite a slight decrease in sales, Mini reported the second best year in its history. In particular, Mini Countryman proved especially popular. Nearly 1 in 7 Countrymen sold is a plug-in hybrid. Rolls-Royce posted the best year in the marque's history. Deliveries rose by more than a fifth, with the Phantom and the new Cullinan performing very well. BMW Motorrad delivered more than 165,000 units to customers for an 8th consecutive record year and substantially enhanced its product line up in 2018. Our electrified vehicles are also doing well with customers. As planned, we exceeded our sales target of 140,000 units in 2018, as planned, with an increase of almost 40% over the previous year. The main growth drivers are the plug-in hybrid versions of the BMW 5 Series, X1, 2 Series and Mini Countryman. The i3 too remains very successful with sales up to more than 10%. Since its market launch in 2013, demand for the i3 has increased strongly every year. Ladies and gentlemen, let's take a look at our financial figures now. Due to the described burdens, the sales are reflected only partially here. Group revenues were on par with the previous year at 97.48 billion euros. Adjusted for currency transition effect, revenues increased by 1.2%. The EBT margin remained above our target figure of 10%. As previously announced, group earnings before tax showed a moderate decrease in the previous year at 9.82 billion euro. As expected, various factors had impact here, mainly development of currency and commodity prices, as well as higher expenses for research and development. Further impacts on earnings came from the challenging pricing situation, especially in Europe, due to the WLTP transition, as well as additional burden from China's punitive tariffs on US imports. As expected, our financial result due to valuation effects was decreasing expectedly. However, the earnings contributions of our Chinese joint venture BBA rose significantly to nearly 740 million euro. Net profit amounts to 7.2 billion euro. The prior year, the net profit due to valuation effects was of around 1 billion euro in connection with the US tax reform had been exceptionally high. The fourth quarter of 2018 developed as expected, with revenues and pre-tax earnings at the same level at the previous year. The EBIT margin of the automotive segment amounted to 6.3%, which was in line with our expectations. Ladies and gentlemen, even in times of difficult conditions, our sights remain firmly fixed forward and to the future. In line with our strategy, we continue to invest at high level. Our BMW iNext has built two blocks for the future. From 2021, we will enable our entire model lineup with highly automated drive systems and the 5th generation electric drive train, which we developed in-house. Capital expenditure, primarily for property, plant and equipment, rose to 5.03 billion euro. These funds were mainly channeled to preparations for the launch of new models in plants in Spartanburg, Dingolfing and Munich, as well in the plant construction in Mexico. We strongly believe in the value of flexible plants. This is an advantage during periods of volatility and significantly varying conditions between regions. CapEx ratio amounts to 5.2%. For the current year, we expect the ratio to be slightly higher. As previously announced, our research and development expenditure in 2018 reached an all-time high of 6.89 billion euro. The R&D ratio, according to German Commercial Code, amounts to 7.1%. In 2019, it will be lower, but still above 6%. The ratio of capitalized development costs amounts to 40 3.3%. The large number of model launches and new architectural modules was reflected in higher capitalized development costs. This year, we expect to see a substantial decrease in the capitalization ratio. Ladies and gentlemen, despite challenging conditions, BMW Group posted a solid results for the financial year 2018. On behalf of the entire Board of Management, I would like to thank all our employees for their commitment over the past year. We would also like to thank our shareholders and investors who have placed their trust in us over the past years. The Board of Management and the Supervisory Board will propose a dividend of €3.50 per share of common stock and €3.52 per share of preferred stock in 2018. This is the second highest dividend we've ever paid, with a total payout of €2.3 billion. As a result, 32% of our net profit for the year will be paid out to shareholders. This is in line with our target corridor of between 30 and 40%. As usual, our dividend payout will completely be covered by our free cash flow. Now let's turn to the individual segments, starting with the automotive segment. Dampened by currency translation effects, segment revenues were on par with last year at €85.85 billion. Due to the external headwinds I mentioned and high upfront investments, EBIT decreased to €6.18 billion. Under these conditions, EBIT margin of 7.2% reached a high level and exceeded our adjusted target of at least 7%. As usual, earnings contributions from our China joint venture is not included in this figure. Moreover, as a matter of principle, we do not adjust our reported figures for one-off effects. Here you can see the EBIT bridge for the automotive segment from the previous year. As expected, we experienced significant headwinds from currency and commodity prices. The net balance of other operating income and expenses had a positive impact in 2018. The 2017 figures included increased provisions for legal disputes and other litigation risks, which did not recur in 2018 and therefore resulted in a positive year-on-year effect. High upfront investments, increasing depreciations, dampened earnings as expected. Higher tariffs, the challenging pricing situation, especially due to the WLTP transition in Europe, as well as warranty and goodwill campaigns, also had a negative impact. Ladies and gentlemen, we responded early to the challenges in our environment and launched a company program to boost performance already back in 2017. Through Performance Next, we are systematically addressing structural issues across the BMW Group, optimizing processes and improving efficiency. We've already made several important decisions. We are significantly reducing the complexity of our portfolio at all levels. We will only develop what customers demand. We are also eliminating derivatives with low demand, as well as reducing our drivetrain portfolio and country variants by up to 50%. This will allow us to focus even more on customers' wishes and requests, and at the same time offset rising manufacturing costs. We have shortened the development process by up to a third. This will enable us to take advantage of opportunities in the market faster and allow us to be more efficient. We are continuously optimizing structures and processes at our headquarters, plants, and at the local subsidiaries. That's how we are pooling our resources across all functional areas. Via Performance Next, we are continuously changing our structures and work methods sustainably, and will become faster and more agile. Now let's talk about the capital flow or cash flow in our segment. Despite higher capital expenditures and lower net profit, free cash flow in the automotive segment is still totaling 2.71 billion euro. We are aiming for a similar amount for 2019. Our financial independence gives us the freedom to shape our own future independently. At the end of the year, by the 31st of December 2018, our liquidity totaled 16.3 billion euro. This means that BMW Group is on a very solid footing financially. This ensures that we are able to take action even though parameters are constantly changing and conditions are getting difficult. Now let's move to the financial services segment, which despite rising interest rates in a number of key markets and fierce competition, continued to grow its business in 2018. The number of new contracts with retail customers increased slightly by 4.4% to 1.991 million. Both our leasing business and credit financing reported slight growth. The penetration rate of 50.0% is 3.2 percentage points higher than in the previous year, mainly driven by new credit financing business in China. Pre-tax earnings reflected the positive business development and reached 2.16 billion euro. Despite a substantial increase in its equity base, the financial services segment achieved a return on equity of 14.8% and exceeded our minimum requirement of at least 14%. Even with growing volatility worldwide, the risk situation in the segment remained stable over the past financial year. Credit loss ratio in 2018 fell and is now at 0.25%. Market price risks for our leasing portfolio also remained stable overall. Prices in the North American used car markets even trended slightly upwards. In Europe, however, we experienced, as expected, slight headwinds. From today's perspective, we remain well prepared for any business risks we may encounter. Ladies and gentlemen, now let's move to the Motorräder segment, motorcycles. With over 165,000 units sold and our 8th sales record in a row, we are on course to reach our target of 200,000 units in 2020. Pre-tax segment earnings totaled 169 million euro, and mainly this is due to changeovers of models and mix effects. The EBIT margin was 8.1%, which again is within our target range of 8 to 10%. In 2018, our customers could look forward to 6 new models. With the new medium-sized models, the new edition of R1500 GS and the higher anticipated new S1000RR and other models, we are expecting further growth in 2019. Now, finally, let's look at intersegment eliminations. Intersegment eliminations contributed positively with 553 million euro compared to a negative 534 million euro in the prior year. As noted in previous quarters, the main reasons for this development are lower elimination of intersegment profits for new leasing contracts due to the lower EBIT in the automotive segment and positive reversal effects resulting from strong growth in the leasing portfolio in the previous years. Ladies and gentlemen, BMW Group is known for its ability to also handle challenging terrain. We like challenges. Despite massive headwinds, we delivered healthy profitability in 2018. This shows just how much operational capacity this company has. So, what are our plans for the current year? Even in this challenging environment, we are setting our standard high. In 2019, we aim to maintain BMW's position in the premium segment as a leading manufacturer, and we will be targeting further growth in all major sales regions. We expect to see a positive impetus from our young product portfolio. However, since a lot of the models are still in the launch and ramp-up phases, earnings will not benefit from the full effects in 2019. Due to the model changeovers, we expect the first half year to be weaker overall. We will continue to make substantial investments in new technologies and future topics also in 2019. The European Union's extremely ambitious CO2 legislation also requires high additional expenses and will lead to higher manufacturing costs, which will impact earnings. At the same time, we again expect to face significant currency and commodity headwinds in the mid to high three-digit million euro range. Further development in tariffs is another major uncertainty. Our guidance assumes that there will be no increase in tariffs between the US and the European Union. The preparations necessary for UK's withdrawal from the EU will be an additional burden in 2019. Nevertheless, we continue to expect that there will be an orderly Brexit. The competitive environment may also get tougher over the course of the second stage in the WLTP transition in 2019. The automotive segment expects a slightly higher year-on-year on deliveries. A range of 8 to 10% for our EBIT margin is our clear target in a stable business environment. We want to reach this as well. There are, however, many parameters over which we have only limited influence. Due to the negative impact of the factors mentioned above, we expect an EBIT margin between 6 and 8% in 2019. The high level of volatility makes it difficult to provide a clear forecast. However, we will continue to use all internal levers in working back towards our strategy profitability targets. In the motorcycle segment, strengthened by our renewed model lineup, we are planning for a solid increase in deliveries, with an EBIT margin between our target range of 8 to 10%. In the financial services segment, we expect return on equity to be on par with the last year and thereby above our target figure of 14%. Now let's take a look at the group figures. In addition to the headwinds I referred to, the absence of a number of positive valuation effects from 2018 will lead to a significant decrease in the financial results in 2019. As a result, group earnings before taxes are expected to be also significantly lower than in the prior year. We will continue to hire specialists in key areas for future technologies. However, in 2019, we will not increase the overall size of the workforce. The total number of employees will therefore remain at around the same level as in 2018. Ladies and gentlemen, risks for our guidance may be subject to additional risks. In particular, this regards the risk of a no-deal Brexit and ongoing developments in international trade policy. Partly as a result of these factors, we are already seeing a slowdown in the global economy. If conditions deteriorate further, effects on our guidance cannot be ruled out completely. Ladies and gentlemen, BMW Group remains focused on the long term. We have already made a number of clear decisions as part of our program Performance Next. We will continue systematically implementing the measures needed for growth, further increased performance and efficiency. This will give us the freedom we need to build a future and secure our future competitiveness. Thanks to our operational and financial strength, we are capable of steering this company successfully through the industry's transformation process. We are continuing to develop our refine our business model. Creating sustainable value remains our goal, not only today, but also in the future. Thank you, Nicola. Before passing on to Mr. Krüger, I would like to welcome a special guest. He's sitting at the far right. I can't see him. He's our overall chairman of the Works Council and deputy chairman of the Supervisory Board, Mr. Tschoch. Welcome, Mr. Tschoch. Now let's come to part two of Mr. Krüger.
Well, ladies and gentlemen, the BMW Group has been the #1 in premium segment sales for the past 15 years. And despite the uncertainties we're facing around the globe, we aim to continue our successful development. The basis for this is the attractiveness of our brand's products and services. Our goal is to outperform the premium segment, and to achieve this, we will continue our model offensive, driving full speed ahead. 2019 will be our year of the plug-in hybrid. BMW will release the 3 Series, the X5 and the 7 Series, all as PHEVs. The X3 will also be available for the first time as a plug-in hybrid. All these models come with the 4th generation of a battery and our electric drivetrain technology, which enables us an electric range of up to 80 kilometers. The 2 Series and 5 Series models will also get a battery update in the summer. I myself drive a plug-in hybrid, and it's perfect to get customers excited about electric driving. This technology offers a pragmatic approach that goes a long way towards improving air quality in cities quickly, because studies have found that plug-in hybrids with an electric range of at least 60 kilometers are driven just as far in electric mode as pure electric models. And we're taking this one step further with our pilot project Electric City Drive. Together with the city of Rotterdam, we're currently encouraging plug-in hybrid drivers to use pure electric mode in the city. And for this, we provide them with all the relevant data on their smartphones. BMW and Mini will also continue to release fully electric models with full speed. The emotional Mini Electric will be launched this year, and media representatives have already had a chance to test it, and feedback has been highly positive, I can tell you. This will then be followed in 2020 by the iX3, and 2021 will be the year of the BMW i4 and the BMW iNext. So all in all, by the end of 2020, we have brought more than 10 new and updated models with electrified drivetrains to the market. And for me, this is a clear statement. With our strategy #1 Next, we will not only boost sales of electrified vehicles. Especially in the upper segments, we also aim to increase sales and revenue significantly. The new X5 is now fully available for the whole year for the first time. The new 7 Series will be released onto the market later this month, and the X7 will follow mid-year. And the 8 Series Coupe will be joined by the convertible and the Grand Coupe, as well as the corresponding M models. In the mid-size segment, our top-selling model, the new BMW 3 Series, has been in showrooms since early March. The first customers have been highly excited by this. Particularly, they've been excited by the extensive connectivity features. We also have attractive new models in the compact class. The new BMW 1 Series will be available for delivery by the end of the year. And I would also like to announce a completely new model today, the BMW 2 Series Grand Coupe. It will celebrate its world premiere in November in Los Angeles and is scheduled for release in early 2020. This model will be geared especially towards young and urban target groups with a fresh and stunning design. So you can see we remain consistently on the offensive. Ladies and gentlemen, the BMW Group is firmly setting its course for the future. customers remain the clear focus of all that we do, with all their wishes and mobility needs. Innovative solutions are our lever to ensure that every customer experiences mobility in a wholly individual way. Ladies and gentlemen, there's been a lot of talk recently about the purpose of companies. But at the end of the day, it all comes down to sustainably earning money with a particular business model. Only then can you secure the continued existence of one's own company. Only then can we create jobs and innovations, and only then can a company make an effective contribution to society. And none of that has changed or will change in the digital age. The BMW Group remains among the most profitable automotive companies in the world, and we will continue to be a reliable and profitable investment for our shareholders moving forward. With this, we have a clear objective for the future, to remain a leader in everything to do, and we remain on our own course for this. Thank you very much, and I'm looking forward to your questions. Thank you, Mr. Krüger. Well, dear colleagues, we'll now come to your questions and our answers, and I would like you to raise your hands if you want to ask a question. This time we will start with Süddeutsche Zeitung, Max Hegler, and following this we will have Börsen-Zeitung, Sebastian Schmidt. Mr. Hegler, please, your question. Good morning, thank you very much. You are talking about the year of the hybrid vehicles. Now there's a large manufacturer from Lower Saxony that has just presented a radical e-car plan, which could be seen as an attack on BMW and also onto your new partner Daimler. So what is your answer to that? Even more pure electric cars, or do you want to go into a discussion with Volkswagen, or do you hope for a politician support? So that's one question. And then behind the discussion, there are also the EU CO2 reduction requirements. You are familiar with the targets, and do you think that BMW will be able to reach these objectives? And doesn't it make sense to get cars a little lower, a little smaller, a little leaner in this process? Audi seems to hope that this could be a solution. So will BMW also follow suit in this? And then a third question, Daimler is also aiming for cooperation regarding platforms, especially for smaller cars from BMW. We've heard some reservations from your FITS, from the Innovation Center, because it could destroy the character of the cars. And you were also talking about BMW's own course, but is it avoidable that you join such a platform cooperation in view of the cost pressure? Okay, thank you very much, Mr. Hengler. I think this is enough room for a longer presentation. But first I would like to hand over to Mr. Fröhlich, the Head of Development. Thank you very much for the large number of questions. I hope I can answer them all. Let's see. Let me start first with the topic of the drivetrain of the future. Well, we continue to firmly believe that our strategy from 2021 onwards to conceptually enable all three types of drives, the combustion engines, plug-in hybrids with a significantly enhanced functionality, and also pure battery electrical vehicles, that this will be the right strategy. Why is that? Well, in addition to the German market, we have the global market to deal with, and there are completely different developments. In China, there's a clear focus on battery driven vehicles, but also significant PHEV volume. In the US, especially from the customer side, there's not that much momentum towards e-mobility, apart from the states that have specific subsidies. And in Europe, we can see from the customer's point of view, the entrance into pure electric mobility, into BEVs, against the backdrop of infrastructure questions is still restricted. That's why we believe our approach is the right one. But nevertheless, we will offer a broad portfolio also of purely battery electric vehicles from our side. So we don't see any attacks in this. We're highly flexible when it comes to the different geo-regions. Then CO2 targets, well, this is a bet on the penetration of e-mobility. Those ambitious goals for 2030 can only be reached if, at this point, from the side of manufacturers, from the side of the infrastructure, but also from the side of customer behavior, a large supply and a large penetration of the fleet by e-vehicles will have been made possible at this point. We're well prepared for this. We can also deliver these high volumes, but we have to stimulate customer demand for this. And the current change in corporate car taxation is the right step. And then if we look at cooperation, well, in the tech topics, in the digital topics, cooperations make a lot of sense, not just to save money, but also to drive ahead the standardization of new technologies, like, for example, autonomous driving in the conventional fields, like the architecture, of course, the platforms and all of that. We see a very intensive competition between OEMs and not that much need for standardization. That is, we're always open for cooperation in specific fields, but our focus and strategy is clearly on the new fields of digitalization when it comes to corporations. Okay, next question by Sebastian Schmidt, and following that we will have Oliver Sachgau. Sebastian Schmidt. Yeah, good morning. I also have three questions. First of all, the delivery targets for electrified vehicles this year. Last year you had a 40% increase. If I read correctly in the press release, the goal is at 10% or below 10%. So with all the plug-in hybrids you've presented, don't you want to put a higher figure into this, or do you assume there will be such a low demand? Then the next topic, talking about performance next, you talked about customer sales, structures, vehicles. If you could tell us how the 12 billion up to 2022 are separated across these three areas, and then the 12 billion, and then the significantly reduced group results. So do you assume for 2020 that there will be a further shortening of the reduction of the dividend that we can expect as a shareholder? Okay, we'll start with Mr. Krüger and Mr. Peter in answering this. Well, it was about the sales figures of electrified vehicles. We have 2 or 3 goals. One was that I showed 500,000 units on the road by the end of 2019. That needs some growth in 2019, but you also have to take into account that part of the plug-in hybrids will only be available in the second half of the year. So the full year effect won't be there. The 3 Series and the X5 with high volume shares. One example, in Belgium in the past, every second X5 sold was a plug-in hybrid. So the volume effect of the X5 and the 3 Series sedan, which will be coming onto the market new now, will only be there on the beginning of in the third and fourth quarter. Of course, we want to consistently grow. Also with the i3, by the way, we want to set a new record year, which would be the 6th record year in a row. Usually, product cycle is high and then flattens, but the i3 goes up year on year. Nicola? Well, performance next, first of all. Performance next, 2017. In 2017, we implemented this. There were more than 10 initiatives, pulling all kinds of levers in our profit and loss statements. If you start in the sales area and significant markets now, we have real-time data available online of dealerships, of deliveries now, of customer wishes, so that we can precisely control everything at any point. That's one aspect. Another significant aspect when it comes to material costs, both in direct and indirect purchasing. Here we've started initiatives and have started to implement them. And one central initiative, in addition to reducing the development time, is the reduction of complexities. Complexities within our product portfolio. Complexities, and this reduction will have a positive effect on our whole value chain. Now the question regarding 2020 will then be answered in 1 year's time. Okay, thank you very much for this. As in the next question now from Oliver Sachgau and then Edward Taylor.
Yeah, good morning. I've got 3 short questions. First is, in your outlook to 2019, you said that possible tariffs between the US and the EU are not to be expected. If such tariffs are enacted, what can you do against this? How do you have any plans to encounter this threat already? And secondly, we heard about a battery consortium of Europe. Would you also take part in such a project? And the third question is, sorry if you answered it halfly already. You said in 2019 the staff will remain at the prior year's level. Does it mean that there might be a downsizing in 2020? Okay, let's start with Mr. Krieger speaking about tariffs. Second is battery cell consortium will be answered by Mr. Fröhlich, and then the question about performance next, Mr. Peter. So, as regards tariffs, I told you in my speech we are clearly favoring free world trade. If you take a look at we are the largest net exporter from the United States by value, and in South Carolina that's created 11,000 jobs. We have more than 70,000 jobs in the US alone. We can prove that free world trade can also create growth and prosperity in other countries. We are prepared and we are flexible. Let me explain this in two steps. We are now building the X3 at several sites in the US, in South Africa, and in China. That gives us the possibility also to create more volume for the US in a situation of tariffs than before, when we were still in competition. So with this enhanced production allocation from the US market, we can react to such effects. So this is the second answer. But I'm really in favor of free world trade. Second part, battery cell consortium, Klaus. So let's start perhaps with electromobility. For our company, this is of highest strategic priority, and that is why already today we've got the highest value creation in this area. And the battery system, apart from the storage and from an economic point of view, is the most relevant and the biggest issue. And that is also how we are involved in this subject, starting from securing the commodities and raw materials by our procurement department, via further development of the chemical products and cells, up to the industrialization competence for battery cells, modules and batteries, which we have already today. And we also have launched joint projects when batteries will be returned to the company. We are already thinking of recycling in order to ensure the recycling. We are currently supporting all European initiatives which are not only focusing on cell production, but on all these competences, ensuring the raw materials, battery development, because it's the product which needs to be competitive. You can only produce it if you make sure before that you do not just develop anything, but something which is really competitive at worldwide scale. And that goes further via production know-how up to those subjects, and we are supporting two main roles. Our priority role is that we are competent in all those parts of the value creation chain, and we are providing this technology at all levels. Second point, we are a very reliable and a very big customer for procurement of battery cells. That means that our strategic orientation has not changed at all. Our capability to act is already very big and will become even larger. Mr. Krüger mentioned the battery cell center, and I've just discussed with Oliver Sipse from the production side the industrialization questions. We do have laboratory production already today of such battery cells. This will be continuously developed, and in an equidistance with several cell producers. We do have cell producers in North Korea and China, and we are also interested in getting several Europeans on board. And together with them, we will continue each time the next cell generation. So already today, we are able to develop a cell, and we also understand how to produce it. And the three criteria, costs, function, and quality, can be ensured already by us. So, and I think this is also the current state of the art. We have already filed some subsidizing applications in Europe. Let me add something. I would like to sum up what Mr. Fröhlich has said. We feel that we are leading the competition already as regards management of process chains and production. And there are not so many in the world. Next, performance. Nicola Peter. Let me give you some more details regarding performance next. I mentioned earlier that we've got the development process, which we optimized further, and therefore, for example, due to an improved virtual hedging, more than 2,500 hardware prototypes can be eliminated. This is a lot of money, and when you just think of the indirect procurement, which I mentioned earlier on, just to give you a feeling for the magnitude, every year we buy for slightly above 20 billion in non-production related procurement. If you just imagine that we could cut perhaps a single-digit percentage, you may have an idea of the potential. Or let me give you another example. At the performance side in our sales, we already have more than 20 markets with a systematic program being implemented where the customer, after having ordered the car, gets an offer maybe to take one or the other option on top. Similarly, as you might have seen this from other online dealers for this vehicle and this configuration, so where we offer the customers that your car would go down well also with this or the other configuration or option. And regarding the development, we are planning for a flat development. That means that on the one hand, we are going to, because we feel it's the correct way, we will certainly develop our future subject. Klaus Fröhlich has just mentioned the example, or one example, in one factory in Mexico, which will be launched live this year. We will build this, but on the other hand, we are also getting close to the years where a lot of people will retire because of their age. And of course, we are going to take the necessary measures and countermeasures as appropriate. Okay, the next one is Edward Taylor, and then I've got our colleague from Denmark, Hakon Redder. Edward, please. Okay, good morning, gentlemen. I've got 3 questions. You said you have prepared for any Brexit scenario, and my question is, do you also plan certain exposures regarding leasing downturn or residual value declines? In particular, I don't know what the situation is regarding a new banking license, whether you might even need a new banking license for your UK finance activities, and would that mean total the revaluation of the entire portfolio? Is that already included in your Brexit scenario? And the other question is, you said you can rule out operational dismissals in the present program, and the next question goes to Mr. Krüger. The extension of your contract is expected. The question is just, are you going to continue, or do you still have fun in the job? Let's start with the third question. I think this is no question at all. And if you want to ask such a question, you have to ask the supervisory board. Full stop. Now let's continue about operational dismissals. Okay. We do not plan any dismissals due to operational circumstances. This is a simple answer to your question. And as regards the second subject, what about the Brexit scenarios and whether we are also prepared for the leasing portfolio? Let me take in advance. Indeed, apart from the United States and Germany, UK is the third large building block in our leasing portfolio. Market development in UK may be different than many people might imagine. Since Brexit, if you just look at the sales numbers, has not been negative at all. As regards residual values, the market has still remained very stable, and also in the current year, we had a very perfect launch. So we do not really assume that there will be a massive distortion in that segment, and that's why the statement I made is still valid. We feel well on the residual value side in all the 3 big leasing markets. Thank you. And now let's turn to our colleague from Denmark and later Ms. Rosbeth.
Good morning.
Mr. Hakon.
Hakon Røder from Børsen, Copenhagen. 3 questions, if I may, please. First, on Brexit, you have stated that you expect an orderly Brexit, but everything is up in the air. You have also stated you're prepared for any outcome. Does that mean you're prepared for a 10% tariff in less than 10 days from now on your export on Mini and Rolls-Royce out from UK going to EU 27? Second question, why the confidence that there's not going to be a tariff on cars imported to the US from EU? One could perhaps argue that if there's a trade deal between US and China, then President Trump will need a new foe, and that could be EU. Thirdly, I've seen quite a long story somewhere, I think it was in the Wall Street Journal, about your cooperation with Daimler. Lots of issues, lots of plans, but there was none figures whatsoever, none numbers on expected turnover or revenue or profits. Is that an issue you could go into today?
Okay, let's start with Brexit and US-EU tariffs, and let's turn to Mr. Krüger. Okay, we are prepared to different scenarios, and today it's still in the air what outcome can be expected. This is a rather difficult question, which Brexit scenario will really materialize, but as regards your question, we also have more than one production site for the Mini. We've got one site in the Netherlands where we are building Minis. We have one site in UK. So we are also able to flexibilize up to a certain level between production sites as regards volume and models. This is the first answer. And also we prepared several scenarios also for a chaotic Brexit. We also planned for a production interruption in our Roxford site. We also will have a short break in Goodwood for Rolls-Royce, and we are further flexible. Of course, we took some measures where we ramped up our stocks in order to be prepared for such a situation. But I believe that in total we are well prepared for that subject. As regards the relations between the United States and EU and the tariffs, and we are still confident at this point. This is the answer, and it's a very simple answer. The world is very volatile. We will have to handle whatever will come. But as BMW Group, we are certainly in a better situation than many other companies. We've got our largest production site in the United States, so that enables us to produce for the US market, especially the SUVs, X3, X5, X4, X6, and in the future also X7. And that gives us, of course, an advantage for the high-volume models in the US market. Of course, tariffs would hit the situation, and that's why we are in favor of free trade. But BMW Group is in a clearly better position than many other companies. And the partners on the other side also know this, just as an add-on from my side. As regards corporations, Mr. Fröhlich will give you the answer. Regardless of what you read in the press about cooperation, there is a situation of fact which is clearly more limited than what is being speculated in the press. We've got limited procurement activities which we are coordinating for non-differentiating volumes, which is absolutely in line with anti-cartel law. And we've got some inline loans, and we have 5 joint ventures, Freenor, Parknow and ShareNow, that has been bundled. It's too early, though, to speak about revenues and profitability of those service areas. We are now in the process of consolidation, and we are also prepared, and that has been mentioned already, to make investments from both companies. Here we are talking about scaling effects. We are not talking about our core business. We are just talking about supporting our core business. And the third point is cooperation for autonomous driving, and this is actually nothing new for us as BMW. Already in 2015 we launched a strategy, we called it Next. We are driving for a scalable system from level 2+ up to level 4 for autonomous driving, and we are going to implement this as a first generation in 2021 with the known partners Fiat, Chrysler, Intermobile Air. So there are many of them. And this is now going into a second generation. So we are going to continue to work on level 2 to 4. As it's the same with e-mobility. Penetration of this is very different in different regions. And in the second generation, in level 4 and 5, we are also going to continue investing, and from 2024 we will launch standardization, cutting costs and expanding functions. And we are very happy that in this approach we have found a very strong partner with Daimler, who will help us in scaling, and will be a certain partner for BMW, another partner for BMW Group. I mentioned already that we are implementing our strategy, and in tech areas we are looking for suitable partners from the automotive industry, but also from the tech industry. That means from a strategic partnership or focusing on just one partner is really nothing you can seriously assume. Thank you, Klaus, Sabine Gusbett and Martin Brink.
I have some follow-ups on the figures, and I would ask you for some clarifications there. So, how high was the burden from punitive tariffs in 2018, and how high were the savings due to the lower US taxes in 2018, and how high are the costs from Brexit preparations independent of the final outcome? And another follow-up that we can ask Mr. Krüger, I think we can ask you, do you want to continue? That's not for the supervisory board to answer, I would say. I think everything's been said about this point. I'm sorry. I mean, you can have to follow up on, but this is not an issue today, period. Nicola. Okay, 2 figures that should answer your questions. First of all, the effects of punitive tariffs between the US and China, around 270 million euros of an effect for 2018. And the second figure, it's difficult to predict how this will develop overall, because the Brexit issue is still up in the air, but we've planned for a lower to medium 3-digit million amount that we've provided for the ongoing year to cope with possible challenges due to Brexit. Okay, thank you very much. And then Mr. Prim, and following that, we will have one question from China next to my colleague Sally Sander, but we start with Martin Prim. Well, good morning. I have a question about the development or the headcount development. So you said you want to keep it stable, you want to hire new people, others will go into retirement, and we're now facing the baby boomer generation to get into retirement. So how much leeway do you have without going into forced redundancies? Which leeway do you have to master future challenges? Then another question, a large competitor here in Bavaria has a similar approach, avoiding those forced redundancies, but nevertheless significant restrictions in production with an effect on all the regions. I mean, you don't just have employees here in Munich, but across Bavaria you have a region that depends on you completely. So are there any plans to shift business there? How will this? What will the effect be also of the opening of the new plant in Mexico? And in this context, the 50% of variances and potentials that you see in drivetrains, where there are certain potentials not to offer certain varieties, will that have significant consequences, because you're also building up plants in other regions? Or will this have an effect on the plants in Lower Bavaria, for example? Ms. André? That's a question to you. Well, thank you very much for the question. You asked for the leeway that we have, the potential to maintain, on the one hand side, the number of employees on the previous year's level, in view of the additional staffing in the future fields and the new plant in Mexico? Well, I would say it's sufficient leeway, but that could be my answer. But I could also refer you to the fluctuation ratios that you can find, the volatilities due to age and retirement, how high they were in the past year. And all of this leads to room to maneuver that we have, and you can find this in our reports. Then there's another topic that you've asked for. Well, due to our high flexibility, be it through working time models, through other forms, we currently don't see any significant effects that might lead to any kind of forced redundancies within the time frame, within the foreseeable future. Thank you very much, and I would like to hand this over to Mr. Zipse regarding production. Well, Mr. Premier, you had a specific question regarding the Bavarian production network. We can go through the individual plants, what's going on there. So if we start with our Dingolfing plant, with the competence center for e-mobility, we are hiring staff currently. That is going ahead at full throttle. In our plant 2.2, we are currently taking the preconditions for producing the 5th generation of engines and high-voltage storage systems, which will then be made available to the production network all over the world. At the same time, new products will be launched. The new 7 Series has just started last week there, and over the course of this year, we will also add the 2nd and 3rd variant of the 8 Series, which will be brought into series production there. Our Munich plant has just seen the launch of the 3 Series, and we're getting prepared for the integration of the i4. So that also shows that we have a stable situation staff-wise here, even if on the efficiency side we've taken major strides ahead. But in these two plants, for example, this is well in balance. If we look at the one hand side, the efficiency gains we have and the ramp-up of production. Then Regensburg, together with our Leipzig plant, is preparing the launch for the new 1 Series. So also in Regensburg, due to the transition, we currently have a slight reduction, but as soon as the new 1 Series will be here, we assume that we'll be on the previous year's level, and all the rest is done through normal fluctuations. And on the employee level, this will not have any substantial effects. Thank you very much. And when it comes to variance, our CFO, Nicola Peter, well, to make it a little more tangible how we can come up with these figures, if you just compare how many drivetrain variants, with how many variants we are highly successful in the US and in China, and compare that to what we have on offer in Europe, then you can see that the first major potential we have. The second major potential is that on the one hand side, we will continue to offer diesel engines and continue to develop diesel drivetrains, but we're nevertheless convinced that you don't need 5 diesel variants in individual models, especially in the European markets, that less than 5 diesel variants could be significant. Could be sufficient, and the positive side effect that will be created in the reduction of drivetrain variants is that also the cost for homologation work all over the world will be reduced significantly. Thank you very much. Now I would ask our colleague from China. So, welcome. I'm a journalist from China. 3 small questions I would like to ask. The first one, we talked about the cooperation plans between BMW and Daimler, and BMW has opportunities in China for ride-hailing cooperation, and Daimler also has a certain approaches, so those services, the ride-hailing services that exist are to be developed further. And so what are the plans regarding that, and are there plans for any global corporations in this regard? So that was the first question, or okay, that was a question on ride-hailing in China regarding BMW and Daimler. This is something I would like to hand over to Mr. Schwarzenbauer. Well, as was mentioned before, we've just closed the joint venture, just recently closed the joint venture with Daimler. It was the agreement was taken the 1st of February. We're now in the setup process. The teams have been formed, and then we will see how we will act in the different global regions. Our first focus is on Europe, but as you rightly said, in China we've started activities. So as a company, we are the first external or the first non-Chinese company that's getting a taxi license in Chengdu. We're testing our mobility services there with fully electric cabs, and how this will continue in China remains to be seen over the next few months. We can't answer this exactly. Thank you very much, Mr. Clausen, and then Mr. Vetter. Mr. Clausen.
Clausen of John Jones. First of all, I would like to ask Mr. Peter regarding the margin. You did not fulfill the 8% as expected. So what are you expecting after 2020 in Stuttgart? They already think that at least in 2021 they might exceed or get the 8% again. So second question, China. You sold 640,000 vehicles there. What's your plan for this year, maybe for 2021? Are you going to get 1 million? And the next question regards employees. You said that due to natural fluctuations, you can really manage this process. That is, in our competitors, they are talking about downsizing many thousands of jobs. Can you give us an idea of the room of maneuver you have? And did I get you right that currently this is not an issue? Okay, that's a nice distribution. Let's start with Nicola Peter, then Peter Nota, and then Mrs. Andre again. Nicola. So first of all, in order to be very clear on that, 8 to 10% will remain our strategic claim as regards profitability in the field of automotive. But presently, just to give you some examples, we have to deal with tariffs, currency exchange, commodity prices, and distortions in certain markets. In some very important markets, we have seen a negative development also due to trade disputes and uncertainties. And in such an environment, 6 to 8% are quite an ambitious goal, and I think I could imagine that as in 2018, by the way, we could also end up at the top of the industry as regards profitability. So it would mean reading in a crystal ball, if you ask me when these global conditions will change. But if you just take a look at the amount of this impact of the subject I've just mentioned on our profit and loss account, you will have an idea that 6 to 8% are quite an ambitious level for 2019. Thank you. The second part of the question referred to planning of sales in China. Peter Nota. Yeah, thank you for the question. In China, we are well positioned for 2019. Let's answer that question first. We are expecting solid growth, mainly driven by our model initiative. This year, for the first time, we have full availability of X3 from local production in China, which is selling really well, and we want to continue so that in the second half of what we reached already in the second half of 2018, we want to go for further solid growth. That's our expectation also for 2019. As regards 2020, I would not like to make any statement at this moment, and beyond, I can say that in addition to our X3, the 7 Series vehicle is also doing very well in China, and a major portion of our volume of the 7 Series is already going to China. And in the second half of this year, we will have the new model, and that will make us very confident for the next future in China as well. Thank you. The part 3 of this question regarded employment again. Competitors are dismissing staff. What's the situation in our company? Mrs. Andre. Oh, then let's give you also, let's disclose some numbers from people who are entering the free period of old age or early age pension. We have already a certain portion, and 2,500 people are leaving the companies. This is not just an expected numbers, this is easy to calculate for pensions. This gives us a room of maneuver of altogether 4,000 jobs. Okay, Philip Vetter is the next, and Ralph Miller will continue. Okay, good morning. I've got three very short questions. Also, one again about employees. 4,000 people leaving the company. I think this will be per year for people who are going to retire or are going on early retirement. As I got you right, I don't see any substantial loss of staff in the year 2019. So this compensation, which is necessary in order to have this flat rate, will happen mainly in administration. Did I get you correctly? The second point is, you said that you don't see an attack of your competition as regards openness to technology, if I got Mr. Fröhlich-Beck. But could you, Mr. Krüger, tell us again how you felt when your colleague Dies mentioned this in Wolfsburg? They also are playing with the idea of exiting VDA. What is your take on that associations? Are you considering the same as your colleagues in Wolfsburg? And the third question is, you could read a lot recently about sponsoring of FC Bayern Munich. Today you announced that you are very much interested in efficiency measures. You mentioned big amounts of money which you wanted to invest in soccer sponsorship. So can you explain this context to me? Let's start staff first, Mrs. Andre. I mentioned worldwide numbers. Early retirement is, of course, mainly a German issue, but in general, I'm talking about worldwide numbers. Of course, the world of employees will change, but and I really stick to my statement. We are not planning any dismissals for operational reasons today, and from today's perspective, we are very confident that everything which is necessary in terms of changes and restructuring measures in our company can really be managed with our current fluctuation and flexibility in-house. Okay, attack is the next question for the Chairman of the Board, Mr. Krüger. Well, you mentioned actually VDA. The first clear statement is we are strongly in favor of the VDA. Of course, there will be also some structural changes regarding the extension of VDA, etc., which is now being discussed. Where I clearly have a different opinion is technology openness. And that is for 2 or 3 reasons. If you just look to the world, infrastructure development worldwide varies widely. So that means that how fast the existing infrastructure will be available for purely electric driving all over the globe as a single solution is something where we really differ, and I personally differ. There are also countries who are betting on hydrogen, and it may be you won't sell any car if you don't have any hydrogen car in the fleet. So that means that technology openness is really a delicate subject. And the third point is that we will have further need for discussion, of course, this afternoon. And the third subject, I already was waiting for this, when I can really play the ball crosswise for FC Bayern Munich and possible sponsoring. Peter Noche. Okay, I would like to embed this question in our brand strategy for the BMW brand last year. We invested a lot of power into a sharpening of the brand identity, and we were quite successful in doing so. And of course, that includes also our big model offensive, our marketing communication strategy, and this also fits nicely in with the partnership with FC Bayern Munich. There are certain talks already going on, but there is, however, no signature under the agreement, so that is why I can't mention any numbers here. But let me give you some numbers anyway regarding the performance side. FC Bayern Munich, with almost 300,000 members, is the worldwide largest sports club but it's even more important, more than 650 million people worldwide are actually interested in Bayern Munich, and that would, of course, is offering a very high social media effect. Out of the 650 million, only 135 million can be seen in China already. There are also many people in the United States. So it certainly means that this could be a very reasonable partnership for the whole world. Both BMW and Bayern Munich are representing happiness and the performance of and the culture of performance. But again, presently there is no signed agreement yet in place. Mr. Peter wants to add something. And all that is, of course, not making nervous the financial the CFO, because that's something which is making available within marketing. And there you can see the numbers as well. Thank you, Ralf Müller. And now, Jose Foncao from Nikkei. Let's start with Ralf Müller. My question has been answered already. Thank you. Then the next one is my colleague from Nikkei, Jose.
Thank you for my question. So I would like to ask about Brexit again. So in case of no deal Brexit, you suggested that the production shift of Mini and BMW engines from UK to the continental Europe would be an option. So you said you are flexible, yes, but of course it's not so easy at all. So could you tell us how serious you are, and if you would really make these actions happen, would it cost more than 1 billion euros?
Vielen Dank, Oliver Zipse.
Thank you. Oliver Zipse will give the answer. Well, you are addressing a very important question, which touches upon business judgment. Now, let me split this into 3 parts. First of all, we are talking about short-term things which may happen. It's all subjunctive, so we all do not know what's going to happen. I think as a group in the production network, we have almost prepared perfectly. We did everything one can do at all regarding interruption of production in April, up to an adjustment of IT systems, which then will be prepared for transiting the borders. Also regarding the documentation of the origin of supply chains, we made a lot of efforts. All that preparation has been completed. On the technical side, we have a lower 2-digit million amount which we spent on that. Now we have to wait and see what's going to happen. And in case of a hard Brexit, we certainly are expecting a certain uncertainty in the supply chain system. But we don't think this is going to be sustainable. We expect a maximum of 4 to 6 weeks of certain uncertainty period, and after that it will calm down. This is our present judgment. What may happen later regarding tariffs, the question is also, will this be 0%, 5%, or in line with WTO 10%? If you assume a low level of between 0 and 5%, the business model of Mini would not be dramatically affected, because we should not forget that the UK market is a big market for the Mini. More than 46,000 vehicles have been sold last year or have been produced in Oxford and remain on the island. And for long-term orientation, there should come much more serious issues in order to think of a basically new positioning. Presently, the 4 factories we have, which is Oxford, Goodwood, Swindon, as the press factory, and Hampstead for engines, are very stable for a simple reason, because we need those capacities, and capacities can't be created overnight. Otherwise, as mentioned before, if we use all the opportunities of our flexible production network in order to respond to such a situation, nothing can happen. And the most important thing is Brexit, yes or no, people will still love this product. They will continue to buy this fantastic product. Thank you. The next is Mr. Hermann and Volker Kort.
Three questions from my side. First of all, could you tell me, Mr. Krüger, how you see the opportunities for an electric modular kit together with Daimler? What do you think about the conventional side? You've already told us, but what about the electric engines? Could you assume a cooperation there? Then the second question, simple figures, your EBIT margin, including China, including the Chinese business. Last year you said you would have to add 1 percentage point to this, so would it then be 8.2 to 7.2? Is that still true? And the third question, what about your CO2 fleet emissions for 2018, maybe also in comparison to 2017, and what your aim is for this year? Okay, regarding the Daimler questions at this point, to once again sort all this, Mr. Fröhlich mentioned it before, there are three elements and no more than those three currently. The first of all, we have the mobility services, which we've clustered with the 5 verticals, the 5 joint ventures. Then Mr. Schwarzenbach mentioned that we've just started with this. We're developing the business plans. We're optimistic, but still right at the beginning. Then we have the cooperation regarding generation 2 of autonomous driving. And then we have what we call the industrial modular kit. Those are different elements, and those could be components, mechanical components, but also other parts. That is that ongoing cooperation. But there are 2 topics which are new in the cooperation with Daimler, which need some development, and that is what we want to focus on. So the industrial modular kit, that topic has existed for quite some time. We're in a dialogue where we look where are synergies for both sides, but those are the core topics of our cooperation for the time being. Nicola? Well, the statement from the past year still holds true. So we would be at around 8.1% EBIT margin if we had included the Chinese business at equity. But that underlines 2 points quite well from my point of view. First of all, against a complex environment, we had a strong year in 2018. And secondly, it shows the correctness of our decision to increase our share in the Chinese joint venture in the future to 75%. And then the third question, CO2 fleet emissions 2018 compared to the previous year. Klaus Fröhlich. So let me start by saying that we are still leading in in the competition. Since 1995, we've gone down 42% in our CO2 emissions, which means that on average we have a diesel that we run diesel cars with 4.9 liters and gasoline engines with 6.9 liters. And in absolute terms, we've stayed at 128 grams of CO2. So we didn't see an increase compared to some of our competitors. So we've remained flat in spite of the fact that we had a serious reduction of the diesel volume that needed to be compensated for. Now, it's been announced before that over the course, and you're certainly considering the CO2 values for 2020, 21, and for this reason, we plan on a PHEV offensive or initiative, which will offer us great opportunities in different markets. And we're the only manufacturer who's able to do this, because the PHEV is an integral part of our architectures, and therefore we can ramp up PHEV variants or include PHEV variants quickly into our production processes, and that's why we stick to our goals that we will keep the EU regulations for the overall fleet of 95 grams. Looking further into the future, 2030, as was mentioned, that will only be possible through a significant penetration of pure e-mobility, BEVs and PHEVs with long ranges, and we're prepared for this. I mean, in the voluntary commitment of 2008, we were the only company who stuck to these figures, and we're still on plan to fulfill all these regulations. Thank you very much. Then Volker Kort, and then we will come to another colleague from China. Volker Kort, please. Okay, now we've heard a lot about Performance Next, and I would now like to focus on Performance Now. The M GmbH, which creates cars with strong margins. We haven't heard anything about M. Now we heard about 70 stronger emission regulations, and also for 2030 when it gets much more dramatic. So is it even possible to have these high-performance cars to cross these emission thresholds, or will the MGmbH be history by that time? First of all, you talked about now. Yeah, the MGmbH over the past 3 years has had a fantastic growth story, not just in volume growth, but also something that the CFO is delighted about. We had a significant increase in the contribution to the result. So M is absolutely an absolute factor in all the areas that we're involved in: power plugins, highly efficient drivetrain concepts, water injection, for example, was a pilot project at M. So M has all the technologies available, so that also in 40 years' time it will still be the emotional top of the BMW brand experience. Well, the high engine speeds we haven't had for quite some time, but we still have high performance, which can be reflected in all kinds of technologies, and that's exactly what we are doing, and that's why you can assume that the emotional levels we've reached with the current M cars will also be at least kept in the future. And you know me, I'm interested in always topping this. So, clear statement here. Now I would ask our colleague from China, Jian Hao.
You have to support me. Yeah? Yes, please. Yeah.
I have a question about the transformation of BMW. You mentioned that BMW is going to transform from a car manufacturer to a tech company and a premium mobility service provider. So my question is smart production still the core competency of BMW, and how we can interpret the underlying meaning of this transformation for BMW? Thank you.
Wir beginnen mal mit Herrn Fröhlich.
Sie sprechen einen sehr wesentlichen Punkt an.
You've mentioned an important point, securing our core business and selling automotives or leasing automotives. Already in the past years has led to the fact that the F&E ratio in the past year, that was already mentioned by Mr. Peter, that we've invested in many digital technologies, artificial intelligence, through highly agile software creation processes, autonomous driving, connected vehicle towards 5G. And you can see that these competences can also be used in a broad way in the mobility sector, and that we are a cooperation partner that many are interested in. And as you come from China, I would like to talk specifically about the Chinese situation. In China, our footprint on research and development has been massively expanded, first in the sense of in China, for China, when it comes to products, but also through services. So you have to quickly fulfill the consumer requirements. But we also see that technologically, China also on the supplier market is turning more and more into a very important partner, that we will have intensified cooperation with Chinese partners in the future. And then we also expect that following the e-mobility, where China with the NEV mandate has the clear economic goal of leadership, we see the same topics also when it comes to smart cities and intelligent connected vehicles and autonomous driving. That is why partnering, be it our license for autonomous driving in Shanghai, in the city of Shanghai, or our membership on the Apollo board, and many other activities with Baidu, Alibaba, and Tencent are of the utmost importance to us. So also in this field, in China, we want to be present, and because this is where the market consolidates itself when it comes to autonomous driving, so we want to be there. We have a research center in Shanghai, and that is our development hub for our Chinese partners, for me. Okay, next up we have Markus Fasse and then Dietmar Krepper.
I would like to come back to the discussion we had in the recent days around VDA and the promotion of electric cars. Let me just say at the beginning, what are you expecting in the future from VDA? What is this association supposed to do for you? There obviously are different ideas within the association, so perhaps you can tell us what your own ideas are for the future of that association. And tonight you are going to have a meeting with your colleagues from Stuttgart and Wolfsburg, where you will discuss promotion of electromobility. I think everybody agrees that in Germany so far that has not been channeled correctly. So perhaps you could also tell us about your ideas. The ideas of Volkswagen have been tabled already. Maybe you can give us your ideas on the subject. And in that context, I would like to ask you, you said that diesel last year went down slightly. Perhaps could you give us a range from where to where and where you are now in Europe? And one idea of Volkswagen is to step-by-step cut diesel subsidies in Europe and turn them to electric cars. Do you think that this is also a feasible way to divert diesel subsidies to electric cars? Okay, let's start with the diesel subject. And I will just look it up and then I'll give you the information. I mean, the reduction on the hit us actually on the CO2 side, but during last weeks, diesel volumes have stabilized again, and the order intake is rather stable again. But of course, diesel engine is a CO2 efficient engine, which is also very good for the CO2 balance sheet, and we are really supporting that idea. And when you really want to get our opinion on VDA, number one, I have to repeat, you should be open to technology against the background that infrastructure may develop differently. There might hydrogen might come in as an alternative. Focusing on just one technology from our point of view is not the right approach. Second subject is VDA is an association which has to find compromises for joint direction. And so tonight, we certainly are going to have a very intensive discussion about that, where we certainly agree with others, and BMW Group has done so already in 2013. We actually have been those who were very much in favor of a bonus for buying. We have a fund of more than 300 million in Germany, which has not been exhausted yet. So promoting infrastructure, promoting electric vehicles, I'm basically in favor of that. But the segments are the cornerstones where we see the orientation, first of all, and all the rest should be left to an intensive dialogue, which we certainly will have tonight, and just wait and see, and you will hear from us. Okay, let me pass on to Peter Lothar, also regarding diesel in Europe. I can tell you that the portion of diesel in Europe in 2018 went down to less than 50%. As Mr. Krieger has mentioned already, we do see in some very important markets that there is now taking place a certain stabilization again. Okay, then let's turn to Dietmar Kröpper, and then female colleague from China will enter. I would like to ask you about openness for technology. Fuel cells have not been mentioned at all today, or just in a marginal side note. Your competitor Daimler is now launching a small series of fuel cell cars, and your cooperation partner Toyota is very active in that field. So what's your take on that? Are you going to let it do the others, or are you waiting for them? Well, that's a harsh question. So, Klaus Fröhlich, even though there is a recognizable punchline in these questions, I want to stick to the facts. And the situation is as follows. Situation of technology openness requires us to be very open also for the subject of fuel cells, because depending on the decision of regulators or on infrastructure measures, fuel cells in certain geographical regions may really become an option. So we are well positioned for that. We are developing this together with Toyota, generation after generation of fuel cells, and we certainly will be as regards competence and product properties, we are still in the lead. We also launched a small series based on the 2015 fuel cell generation. As it's the case in electromobility, where we already are developing the 5th generation, you always have to know from what point of time a technology may be scaled. And a fuel cell drive of the 2015 generation has 15 to 20% more costs than a the conventional drives. And we think that the 2020 generation and 2025 generation will bring a fuel cell to a cost structure which can be comparable to what an electric drive will cost, or what a combustion engine will cost. If you calculate now, you would calculate with a high portion of platinum and gold. So this needs to be tested, of course, but you also have to be patient and to put this technology to a cost level where it really can be used. And this will be the case in 2025. Fuel cells, moreover, is competing against battery cell development. Why? A fuel cell car is nothing but a battery-driven car where the battery has been cut off and replaced by a permanent charging device, which is called fuel cell, where you continuously charge a battery and then you have the hydrogen tank on top. So the subject of battery cell development as regards energy density is developing in such a recent pace, and we can't even see this going down, that with the same level of freedom from emissions, the costs for driving performance will also play a role. What we can see is that all economies of the world are mainly investing in electromobility infrastructure. The probability that there will be a full-fledged hydrogen infrastructure will be very low. But there are certain fields of application, and that refers to the southwest German company you mentioned much more than BMW, namely detailed or partial driving into cities or long-distance drive, where, as compared with electromobility, when you just look at the charging times, it's much quicker to charge hydrogen than loading a battery. And so from 2025, especially in the utility vehicle business, there will be a considerable amount of fields of application, and we do foresee an enormous potential of growth in order to be working in this utility vehicle sector. Let me just add the openness to technology, which is so important. There may be regulators where you can't offer any fuel cell car in your fleet. You will not be able to sell any car of your production at all. And we had this situation in the world already in case of other technologies. So we have to be very much aware of that. If you do not have this technology ready and marketable, you might even not be able to sell the rest of your fleet. And BMW Group has it for that reason. And let me clearly state again, this is also your point for openness to technology. You are actually taking a risk, and it may be a relevant country which will not allow you to sell any cars if you don't offer this technology. Thank you very much. Our colleague Peng from Tencent, China.
Well, thank you very much. I also have 3 questions. It was mentioned before that up to 2020, you want to introduce improvement or savings of up to 12 billion. Are there any additional measures? Then up to 2021, by the year 2021, the iNext will come onto the market. Are there any information you could give us about that? And then the third question, digital center. Your center will be one of the largest in Europe. So will you maybe also, globally speaking, will you be searching for partners with whom you can cooperate in this context? Okay, let me start by answering or heading to Performance Next and the 12 billion. The second part, then about the iNext, and the third part, digital center will be the largest in Europe. Do we also need a partner for this? So let's start with Mr. Peter on Performance Next. Let me just mention once again what We reached, first of all, in 2018 with an EBIT margin slightly above our guided corridor of 7%. And if you add to this the Chinese business, as we discussed before, we would be slightly above 8%. The second point. Now, what have we planned and what will Performance Next pay into? Well, we want to get an EBIT margin again of 6 to 8% in the automotive business due to the exogenous factors that I mentioned before, and then 8 to 10% in our motorcycle business, and on the previous year's level in financial services. So the significant reduction in the net profit of the group was due to technical effects, especially cross-divisional eliminations and other effects. So our plan is that we will save these more than 12 billion with the 10 initiatives which we've implemented. There will be initiatives that have a direct effect already in 2019, and especially topics such as complexity reductions, which only over the full time of the period will also have and show their full effect. Thank you very much. Then the question on the iNext in more details, and then Mr. Fröhlich will talk about the Center for Autonomous Driving. Mr. Krüger. Well, the iNext is a technology carrier for us, and I've mentioned that it's much more than just a vehicle with 4 wheels. It's about connectivity of the future. So how can customers take their digital life to a next level and experience it at a higher level with BMW? It's about an electric drive with more than 600 kilometers of range for short and long distance trips. It's also about the interior of the future, and my colleague will be talking about autonomous driving. And if I drive autonomously, I can experience the interior in a completely different way, and therefore it has to be shaped in a way that's convenient to the customer, that lets them experience joy, so that the opportunities that are being created by autonomous driving can also be used on the interior. We will offer level 3 autonomous driving with this in 2021, and we will have a pilot fleet of level 4 and level 5 cars. That is to say, we will experience this, and we'll have the level 3 series start for autonomous driving, level 3, and then gain our experiences on level 4 and 5, and use this then as a technology bearer that we can then use the technology in other models and series as well. So the i4 is a fundamental project for all of these technologies I've just mentioned. Let me come to your third question, the Digital Center Europe. Well, it's a highly dynamic world there. I mean, we're growing in these digital topics extremely fast. We don't just have the compass for autonomous driving, which you opened 1.5 years ago at Unterschleißheim, and in the meantime, more than 1,000 BMW associates and employees of other companies work there. And then when it comes to software development, not just for the classical product, but also for corporate IT, we've had an increase of software skills in Portugal, for example, in a joint venture. And China, even today, is my second largest development center in Shenyang, Peking and Shanghai, with a focus on digital topics in Shanghai. So even today, we have a team of more than 100 employees of software application and artificial intelligence experts in Shanghai exclusively for the topic of autonomous driving in China, and they are also responsible for the fleets that we run there in this context. In China, we've had the quickest growth when it comes to digital topics. So Digital Center Europe probably won't be the main topic in my presentation in 5 years' time. Then China will be a very important digital site, which doesn't just do development for China, but for the world as a whole. Thank you very much. I would like to add to this that we can experience today that the digital behavior of our Chinese customers is completely different from customers in other areas of the world. So what's being expected when it comes to digitalization in the vehicles as a purchase reason or a non-purchase reason is much more than in other regions of the world. Okay, we still have some 5 minutes left. I would now like to call up our Italian colleague Isabella Pofacci. Thank you very much. My question in English.
So my question would be, how important is the Italian market for you? But I would expand it and go in more on the importance of continental Europe, excluding Brexit, but also Germany. How strategic it is for you, or do you see that Europe is just a bunch of rules that are piling up, a bit against the business of auto? Thank you.
Thank you very much, Isabella. Peter?
Well, thank you very much. Europe is, and you could see this in our figures in the presentation by Mr. Krüger and Dr. Peter this morning, is a very important market for us, including Italy, of course. We have a high market share in a large market, and if we leave out our home market of Germany, then we are still the number one in the premium market in Europe. So I can confirm that Europe is a highly important market. We continue to invest into our brand in Europe, of course also to the right drive technologies. Hybrid technology, for example, is definitely part of that. And Europe is and will remain a very important sales market for us. And globally speaking, I mean, we aim at a balanced sales distribution. China right now has the biggest growth, but the United States and Europe are still very important markets for us as well. To get a balanced situation, and we want to gain market shares in all global regions. This is what we're doing in China, this is what we're doing in the US, but also in Europe, in a very competitive market. We want to gain market share. This is a clear goal that we have. Okay, then I now have Armin Zimny. Well, I would like to ask a follow-up about battery cell production. Mr. Fröhlich, you said you know how to develop and produce a battery cell, but it hasn't become clear for me whether you want to drive this ahead, whether you will apply for government funds for this. And then a question regarding the e-drivetrain or the e-engine. In the past, whenever you developed a new combustion engine and brought it on the market, then you presented all the performance data. Now you have the 5th generation of the e-motor, the e-drivetrain, and I've never heard anything about performance data in this regard. So how should I understand this? And then an add-on regarding the development, regarding the sponsoring of FC Bayern Munich. Audi clearly stated that they want to go through with their sponsoring agreement till 2025. So, Mr. Notter, could you imagine buying out Audi of this contract? Okay, thank you. I think we'll start with Klaus Fröhlich and then Peter Notter. Regarding battery cell manufacturing, this is what do we do with our expertise? Well, we use it even today so that battery cells that get delivered to us will be refined into BMW cells. So we are part of the development of battery cells. It's not a commodity market for us, to clearly state this. And we've also applied currently at the Federal Ministry of the Economy we've applied to get some funds for the massive buildup that we have in this technology. But there's one point I think is extremely important when it comes to battery cell manufacturing, and that is left aside recklessly, from my point of view, by many German players in this regard. Whenever a manufacturer enters into a large-scale battery cell production, the business model that you have with another manufacturer, for example, from China and Korea, that you develop battery cells together with them and that you get access to them. And for the first place, that will end at this point. And no matter how many battery cells you will produce in Europe, due to the regulatory requirements in China, you will need someone in China to deliver competitive battery cells for us and to develop them together with us. And that's the point you have to take into account. And the risk is that if you have a very relevant battery development in-house or a huge joint venture, that this would lead to the fact that you would get negative effects in some of the other markets, which might not just endanger the result, but also jobs in Germany. And that hasn't been mentioned enough in the discussions. So, of course, we want to drive ahead Europe as a production site. But for the same reason, we want to seize all of our expertise and know-how, because, as we've mentioned before, this isn't nowhere else present so much as with BMW. But the basic condition for this is that we need to be a reliable partner for such an investor and to play this role. And that there's a very good reason for this, which, from my point of view, should also be mentioned in the discussions in Germany. Then, of course, data, the performance data on e-engines. Of course, I'm a developer myself and an engineer. And what's new there is the topic of the overall efficiency. That, in a way, that at some point, rare earths and the dependency on neodyne and other rare earths can be reduced. So for 15 years, we've driven this ahead. And the positive piece of news is that with the Generation 5, for the first time, we will have e-engines free of rare earths that still have the same degree of efficiency, because the degree of the efficiency of an e-motor is calculated when you add it to the cost of the battery, the size of the battery. So e-engines have to have have to offer high efficiency, and at the same time, the classical conditions like performance density, what volume or how many kilogram you need per kilowatt, those will be driven ahead just as well, and they're also available, and I can offer this data to you as a follow-up. And there's one thing that we have that special our series developers and series producers have developed the e-engine for the Formula E, where when it comes to tolerances, to manufacturing concepts, we need to fulfill extreme requirements, also when it comes to performance density and efficiency. And our series developers have been able to play a major role, and they even were able to win a race with the with our drivetrain in this race series, and we aim for the emotional leadership in the industry in this regard as well. Okay, and then Peter Nota once again on FC Bayern Munich. The relationship between FC Bayern Munich and our competitor is between those two parties. Buying someone out of the contract is not under discussion. And one point on our position in Europe, in 2018 we gained segment shares in Europe, so in Germany as a home market, but also in the rest of Europe, and that also remains our aim for 2019. Okay, now the two last questions from Thilo Boss and Robert Tursa from Slovakia. Thilo Boss, maybe we can sum this up.
Just again, two questions regarding battery cell production. You answered part of that already, Mr. Fröhlich, but I still would like to know, the Federal Minister of the Economy provided €1 billion for development of the Lausitz region. The competitors have already jumped on that bandwagon, you did not. Are you expecting some market disadvantages from that? And the second question is, it's not only going to be used for cell production, but also for R&D. And if your competitors are on board and you are not, this might also mean a strategic disadvantage for you. And a very short question regarding the 2 Series, the new T Series. I would like to know where you are going to make this car. Klaus, just very simply, just in order to avoid misunderstandings. This billion of euros is not provided for the Lausitz region, but for promotion of battery cell development and production as a whole. First point. The second point, I already made a note that we will take part in these awards. We also filed 2 applications on the subject where we applied for funding of development of battery cells. And this means that I can't see any disadvantage. On the contrary, the Federal Ministry of the Economy and also the Chancellor in Germany were really pleased to see that, especially with the different German players, BMW really came on board and put in some momentum. The next question was about the 2 Series production. It will be in the German network, but all the rest is still confidential. You will need something for another punchline on a different day. The last question, Robert Torsa.
Thank you very much. Just 2 short questions.
Yep.
Last year, your company decided to build a new production plant in Hungary. Is it possible to say which models do you plan to produce there, and why was the Hungary better choice than Slovakia? Thank you very much.
Oliver Zipse.
Up to now, we have not announced which vehicle will be made there. There is still some time to go because it will take some years until the factory will really be working. I think regarding the reasons for choosing Hungary as a site, those reasons have been communicated sufficiently. Just to sum it up, we are extending our production network inside Europe because we are strongly convinced that Europe will continue to be a growth market, and in particular in our global value-adding chain, we want to balance it out between Europe, China and the US, and we want to be able to produce all the big series models. And the choice of Hungary, and in fact it's the east of Hungary, in many components, the flexibility of working hours, wage costs, qualification of staff, quality of life for the staff, and qualification, they really were in the lead, and that's why we decided for that site. Now, dear colleagues, thank you very much. That was the balance sheet press conference of BMW AG. Thank you for coming. Thank you for your questions. And of course, it goes without saying that we invite you for lunch now, and some of our board members will also join you for lunch. Thank you for having us. Thank you.